Welcome back. It's time for Overlook Stocks. George Tsilis, senior markets correspondent, joins us to break down HIMS and HERS Health. Shares moved lower, not just lower, but sharply lower, down about 26% today after the FDA basically said that Novo Nordisk no longer has shortages of its GLP-1s, Wegovy and Ozempic. They're no longer in short supply. George, thanks for joining us. Explain to us why this matters to HIMS and HERS, because I know there's that loophole that allows them to produce it if it is in short supply. If it's not, does that mean they can't do their compounded GLP-1s?
Yeah, it's a good question. I mean, at the end of the day, HIMS and HERS is a licensed healthcare company. I mean, they focus primarily on things like dermatology and wellness for both males and females. And it's a very popular brand, and they've been gaining traction when it comes down to consumers. But the big trend in the past year certainly has been weight loss drugs, GLP-1 types of compound drugs. And there had been a shortage from primary pharmaceutical manufacturers, branded pharmaceutical manufacturers for that matter, like Novo Nordisk and Eli Lilly, which include Wegovy and Ozempic. And so there had been a big growth in the off-label compound pharmacy elements behind these types of weight loss drugs that a lot of companies have actually moved into. And HIMS and HERS took advantage of this trend and started basically marketing and selling private label compound GLP-1 types of drugs. And so ideally speaking, the pie for this market is growing for everyone. And HIMS and HERS took advantage of this over the last year. And for all intents and purposes, it has been relatively successful in terms of their trailing sales and also for the expected sales and earnings going forward. And so today's news is rather interesting in the fact that essentially the FDA came out and declared that the shortage, which has been sort of long-standing over the past year from the mainstay, branded drug manufacturers, Eli Lilly, Novo Nordisk, is over. And so what that is doing is it's sort of reestablishing an equilibrium for HIMS and HERS, which essentially had been moving into that area, providing similar types of drugs, similar effectiveness at much cheaper prices. And so Wall Street is very clever because Wall Street obviously goes through bouts of extremes, both on the high and the downside. And unfortunately, today is a downside demonstration of some of these extremes. And even if you look at the sales of the entire business, they have been growing, particularly in the last year. Sales grew about 56%. And in the forward 4 quarters also, they're expecting around 58% sales, which a lot of that has to do with these GLP-1 types of drugs for weight loss. But one of the things about HIMS and HERS is they are growing profits on an adjusted basis, but prices, if you just look at it, for instance, over the last 3 years, really went parabolic in the past few months. Particularly, there's an element behind some of these smaller cap trending stocks. Now, HIMS and HERS also had a big advertisement on the Super Bowl. That also might have been part and parcel of what we saw in terms of this run-up. But even as the stock continued to move to the upside, the short interest can continue to move higher as well. And it sort of went in sync with the trend in weight loss drugs, the market capitalization, the trend in the business, as well as it achieved some sort of meme status as well in the past few months. And it was a short squeeze. And we saw that short squeeze occur with the stock basically doubling in a very short period of time. And so with this news, that's enough of a catalyst to extinguish the fire of the bulls and push the shares back to the downside.
Yeah, down about $17. And despite that, it still closed just above $49 a share. And I was taking a look at the Wall Street community. I mean, the median price target is $26.50 on this name. So there's certainly not a lot of bullishness in terms of Wall Street analysts. So I think the big question is this just a one-time hit or a bigger hit to the business? And this 424% one-year gain might not be as warranted anymore.
Well, yeah. So even before this news too, Caroline, I mean, just looking at the stock, I mean, relative to, for instance, its 10-week moving average, which is an approximation of the 50-day moving average, it was extended. And the short interest was quite high. So there was a bit of a short squeeze. And this is also, if we can zoom out a little bit, there's a narrative associated with some of these other high flyers like Robinhood and Palantir. So there's a sort of second tier level of stocks below the mega caps we always talk about that had been pushing to the upside. And now when you see market corrections like we see today, that also adds to the distinguishment, if you will, of the momentum in this particular name. But there's also a value component we have to consider here as well, because irrespective of the fact that the company is expected to earn this year for fiscal 24, which they're going to finalize the reports on Monday, the 24th, 53 cents. The expectations for all of this year's calendar year, but fiscal 25 is only 56 cents. So the price ran up too far relative to estimates, trading at a high lofty valuation, and we're seeing basically a retracement of the price action to better match the growth prospects of the business relative to the price.
Okay. All right. Well, we'll keep this one on our radar and see what happens next. George Tsilis, thanks so much.